The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 24th marvelous Monday edition of today's opening call on the Trader's Edge, folks. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call where there is no vision, folks, there is no direction. Write that down. Where there is no vision, there is no direction. Now, if we don't have a specific outcome in mind, or we don't know where we want to go, we may very likely end up in places that we don't choose, folks. And as we begin Marvelous Monday, let me ask you a question. What are your specific outcomes for the day? What are your specific outcomes for the week? It's September 24th. What were your specific outcomes for the month of September? Are they written down? If they're not, why don't you just spend just a few moments and write down what is your one outcome that you would like to attain today? What is the one outcome that you would like to attain as we go into the end of the week out here? 5 days, folks. You want to know what your outcomes are, but mostly what you want to know is your strong reasons why. Why is it that you want that outcome? And are those reasons strong, folks? They need really strong reasons, because without strong reasons, folks, without strong whys, without a strong purpose, well, it's like driving your car around with that little empty light on. You know, have you ever driven around with that gas light and you got that orange light? Usually they're orange lights, I think, that they're flashing, they're glowing orange. And folks, if you don't have strong reasons why, you're likely going to go ahead and run out of gas. Of course, you know, folks might be driving around with their check engine light on as well out there. So make sure you've got strong reasons why. We can take a look at examples. How about Henry Ford out there? I'll bet you there's a number of folks listening in on the radio that actually drive a Ford. Nothing wrong with driving a Ford. And if you talk about Henry Ford, he used visualization. He pictured in his mind the type of automobile that he wanted to build. He also had in his mind the price point that he wanted, and he wanted to make sure that most people could afford a Ford. How about that? That's a little play on words out there. Now, he created a mental blueprint of his dream car, of his dream everything before it was even put on paper. So envision it, folks, and then put it down on paper. You know, he pictured a great number of people buying and driving his cars. It only became a matter of time before his vision became a reality. By the way, folks, you know, you learn from failure out there. How many times do you think Henry Ford actually failed out there, went bankrupt and so forth? Do you think he had strong reasons why, folks? He went bankrupt 5 different times out there, but he had a vision. He had a strong vision. He had what? He had strong reasons why he wanted to make sure that he attained that. And folks, that's why you want to make sure that you've got a strong reason why as well. Envision your outcomes, have strong reasons why, never give up. And like we discussed last Friday, folks, rule your mind and you will rule your world out there. Create your vision, folks, and might I suggest that love should be a part of your strong purpose. In fact, tomorrow, I think what I'll do is I'll talk about that unconditional love out there, because that certainly is one of our tools that we need when we lead an inspired life. Our call-in number, 877-927-6648. As I said, this is the Marvelous Monday edition. You got the markets trading off right now as we take a look at the futures market. You've got the Dow futures off about 40 points or so. ES Mini traveling out at 1447. Even Steven, we're taking a look at this on our TigerTV chart out here. If you are following along on TigerTV, that is a wonderful thing, because you're going to certainly learn. We'll take a look at patterns that are out there. We'll take a look at candles. If you're listening on the radio or maybe on your device, your mobile device at tfnn.mobi, maybe it's a new Apple device out there. I understand they sold about 5 million or so Apple iPhones over the weekend. Pretty cool deal to be able to do that. out there. So maybe you're listening on one of those devices. You can always catch an archive of this show on Channel 9. And if we take a look at the S&P 500, the ES Mini Futures contract, what we can see, it's really running into an area of resistance. That resistance, or support, I should say, that area of support is this bullish engulfing candle. Let me get this mouse here writing. That bullish engulfing candle happened at 10:30 in the morning on September 20th out there. Engulfed the entire prior session out there. That was at 10 o'clock. The low on that prior session makes that area the support line. That's 1443.50 out there. We'll see if the ES Mini is going to be able to punch through that. If we take a look at, I'll just pull this back. Let's take a look at maybe a longer term A to B equals CD that is out there. When you take a look on the left-hand side here, folks, one of the things that you will see is you'll see my retracement ruler. It's going from the low to the high, the low out here. And again, we're looking at an intraday chart. It works this way in any chart. What you want to do is you want to find those major detours, those major intersections when you're taking a look at chart. It's just simply where you see a change in trend, a change in polarity out there. If you take a look at on the ES Mini, that would put you in at about the 10 a.m. time frame on September 13th. That marks my 0 point. I go from that low all the way up to the high that was put in on the ES Mini out at 10:30 in the morning on September 14th, out at the price point of 1468. From low to high, what you'll see is 1443 is sweet 618. That's the level where the ES Mini stopped at. I mean, almost really right to the penny. The last time down, that was that low that we gave out at 10 o'clock in the morning on September 20th out there. If we do take a look at possible A to B equals CD patterns that are setting up, our A point's going to be that high. That came in at that 1468 price point. Our low now is going to be where we had that, in essence, that bullish engulfing candle. So your B point is the low of 1443.50. If that area gets taken out, that would be sweet 618. If it gets taken out, that's where you've got your last real sign of where the bulls were hiding. Are they hiding? Are they sleeping again out there right now? 1-to-1 A to B equals CD takes you to where? You're looking at it on the screen here. Takes you to 1437.50 out there. What else do you have in the 1437 range? Well, if you go all the way back on the left-hand side of the chart, folks, what you'll see is at 1437, 1436.75 to be exact, happens to be the 0.786 retracement. I suspect that if we see the ES Mini cut through this area, that's where you'll find your next support. Of course, you won't really know until you see when the bears show up. And when the bears show up, folks, they'll reveal themselves. They'll reveal it in a candle. If you haven't had a chance to go to the homepage of TFNN.com, do so. I'll go ahead and put that up on the screen. There's a free report that I've put out there. And really, the free report, folks, maybe you don't understand. Well, that's the wrong page to put up there. Maybe, you're not familiar with candlestick charting. It's only been around for 2,000 years. It is something that you want to learn because it's the way that the bulls and bears reveal themselves to you each and every day. They check in, they go to work just like you and I do. One person's a bull. That would be me. Another person's a bear. He'll be in here when we do the 10 o'clock show, when we do the Money Masters. All we're doing is checking in at work. We're taking a look at the screens. Maybe we look at a little bit different things out there. But the fact is you want to go take a look at the newsletter. You want to take a look at the newsletter too, but go take a look at the special report. It's called Candlesticks, Speed of Trust by Steve Rhodes. It's a second line item down under breaking news. And there's also going to be a workshop that I'm going to be doing. I believe that is in this little left-hand side carousel out here. There it is, silent signals and the speed of trust out there. Go check that out as well, folks. That is on the homepage of TFN.com. Now, as long as you're over there, this is a fantastic week. If you are in the Florida area, make sure that you, take advantage of a really special training session. It's a free training session. It's on, but, free does not mean, or freedom does not mean free. That's for sure out there. You're going to have to invest some of your time, but it would be a great Saturday morning. It is going to be out at the Grand Hyatt, September 29th. So it's this Saturday. It is 8 or 8:30 until noontime. All the details on the homepage of TFNN.com. It's where you're going to really learn about being able to trade the Nadex platform out there. So really great time. Sign up for that, as well as if you don't have Tom's report, the white paper, the bull market in Florida housing, go and check that out as well. Download that. Even if you maybe don't have interest in investing in the Tiger Real Estate Fund, maybe you're not a qualified investor, the information that's contained on there, folks. The education is always about taking, when you consider it like this, there's about today, just today in your life, there's going to be 30,000 images that are going to cross through your mind where you're going to, somebody's competing for that space in between your ears out there. Just take a few moments, read that paper. There's probably a few moments of silent time that you're going to have over the next 24 hours. Print that paper out, go read it, because there's great information in there. We continue taking a look at the markets here. Let's take a spin around the world. Right now, you've got the DAX trading off 50 points. Let's go see what they're doing over in Germany. Getting close to Oktoberfest, with it being fall, with it being September 24th out here. You can see the DAX. I'm going to blow this up on my screen here. The DAX is off of its lows this morning, trading out at 74.01. It made a low so far of 73.88 out here. What's important on the DAX chart is the mere fact of Friday's action. Now, Friday's action, you had the DAX actually leading the markets. What I mean by that is a swing point high where it made a 1-to-1 A to B equals 1-to-1.272 A to B equals CD. That pattern completed. You could argue it completed 2 different days. September 12th, as it got up to 74.10, because 74.17 was the actual A to B equals CD. Of course, it closed at 74.13 on September 14th. That high was 74.46. On Friday, the DAX closed just over it. It closed at 74.52 is what we're going to call it, 74.51 and change out there. The DAX wants to get to higher highs out here. If you take a look at the DAX, really not giving up that much, even though it's trading down 50 points. I don't have the volume inside this. Maybe when Tom is in here, we might be able to pick up the daily volumes. I'm really interested to see Friday's volume, though, inside the DAX, as it took out that swing point high out there. It is trading back inside that range, but the DAX is signaling to me it wants higher price. There's been no bearish candles out here as of yet. If we take a look over at the FTSE, that's down 0.5%. That's trading out at 58.23. Let's go take a look at the FTSE over in London, see what she is doing out of the FTSE, actually doing a retracement. And thus far, let's go ahead and redraw that on my screen out here. Let's go from we're going to take a look at the last set of swing points. That's going to be the low on September 5th out at 56.34 and change, all the way up to the high put in on September 14th at 59.32. You can see the FTSE has only done a dead cat bounce retracement on the way back. That would take you to the 58.18 level. You're at 58.23. This morning it did get down to 58.06. Doesn't really look too bad at this stage out there. That is on the FTSE. The FTSE has been weaker than the DAX. If we go take a look at what's going on over in Asia. In Asia, you had the Nikkei down 40 points off about almost 0.5% out there. You did have the Shanghai up just slightly, up 6 points out there. So let's go take a look at the Shanghai. We know that the Shanghai here, let's go take a look at what it was doing. Let's actually take a look at the weekly chart first. So on the weekly chart, let me blow this up on the screen here. Boy, time flies. It had completed an A to B equals CD down this morning, or last night, I should say. The FTSE closing up 6 points. When we get back, we'll go take a look at the daily chart on the Shanghai. 877-927-6648. Hopefully you're off to a fantastic, marvelous start of your Monday. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And before we went to break, we were taking a look at the Shanghai. I had the weekly chart up on the screen. You can see it closed at 2129.09, trying to get back inside its range and really back inside the area where it broke out. The Shanghai, after completing a 1.272 butterfly buy pattern, it did that, folks, on September the 5th out there. It got down to a low of 2124.87. The actual 1.272 expansion was 2130 out there. Now, it was really an ideal butterfly pattern out there because you had some real conviction off it. You got a nice bullish candle here on September the 6th. And then what you had was really conviction behind the move. You had wide price spread coming off of those lows out there. That was on September the 7th. Now, what did the Shanghai do? It moved back and it tested that breakout area, but it closed back below the swing point from September 5th. It did that last week on Thursday. It also stayed below that area on Friday as well. This morning or last night, closed back above it. We'll see where this wants to go. We'll want to see another sign of strength out there inside the Shanghai index out here. If we go take a look at some of the things that are popping and dropping in the market here, as far as, let me just first let's cover the commodities. You've got King Dollar up 32 ticks. You've got gold trading back $14. If you did get a chance to check out the Nadex Bull Bear Binary Option Hour on Friday, myself, Tom, Darrell, called on an intraday chart. So that's why you want to sign up for the workshop out there. But we certainly took a look at patterns. It happened to be, I was looking at a couple of patterns, both in silver and gold, because on the intraday charts, in taking a look at a very short-term trade, what I was looking for were those items where the rubber band had stretched as much as possible. And it was really beautiful because we had a 1.272. In fact, maybe I can put that chart up here on the screen. I've got to go down to the intraday. I'm sure it was probably the 10-minute chart that I was looking at. And if we take a look at the 10-minute chart out here on gold, it was making a 1.272 butterfly. Let me just refresh this screen here. But folks, you can catch the archive of that show. We called it. We went to commercial break. We called it at about, a little bit right around 10:30 because we had Larry Pesavento on. We were taking a look at the divergence between the transports and the Dow. And as we came back from break, we went ahead and put the trade on, and that was in the 10:30, 10:40 time frame. And by 10:50, after our next break, gold was pulling right back into the retracement area. The retracement, now somebody just draw that pattern on here. It was really pretty easy to do because what gold was telling us was it was going to go in either direction. It was going to make its next move. You got to like when the back is up against the wall. And so now this is showing 1 point. Let me just show you the 1.272 area. It made just a slightly higher high. So there's 1.272. Forget about it. But in any event, it was a 1.272 expansion. It was pretty easy. If that area was going to be taken out, it was going to go up to the 1.618 area. But realizing that gold had really also stretched on the overbought area, it was more likely to the downside. We took that trade. And in short order, folks, what we were aware of, as you should be on any trade, we were aware of our retracement levels coming off of the lows out there. We knew where the 0.786 level was, or the 618 level was. That's where we took some profits on this trade out there. That was on gold. Now, gold is certainly just pulling back. If I take a look at the weekly chart out here on gold, I'll put this up on the screen for you. What this does is it shows you the different QE time periods and gold and the trend line. Gold is in a long-term bullish mode right now. I say that because you had the 50-day cross right through that 200-day. That's a lagging indicator out there, but it's an important indicator to be aware of. And that occurred last week. If we take a look at QE3, again, this is the weekly chart. QE3 until the level of 1720 is taken out. All that gold is doing is giving you an opportunity to get back in when this finishes its retracement out there. I suspect that's going to come in somewhere around the trend line. You'd have to go take a look at the daily charts out there. What you really want to be paying attention to is candle patterns as the retracements are being made. If we take a look at gold here, you can see not doing too much so far on a daily basis, just simply moving sideways. It has been moving sideways ever since September 14th out there. If we take a look at what's moving in the pre-market, out here, you got Lennar Homes. Lennar up, it closed out at $37.51. It's up almost about 80 cents out at $38.35. Taking it in the shorts again is going to be Questcor. QCOR, we told you not to get in front of that freight train. It closed at $30.13, trading at $22.30 right now. That stock had total air come out of it. It is trading below that high volume. I mean, it had 63 million shares come out on September 19th. Trading below that area. 877-927-6648. When we get back, we'll go see how these markets are going to drop and whether or not they're going to pop. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. You got the Dow off 51 points. S&P's off 8. Composite down 27. Small caps, no, small caps not leading the charge. They're down 5 points. It's the composite leading the charge to the downside. Apple trading off $12 right now, down almost 2%. I believe mostly on the news that over at Foxconn over in China, they're having some kind of troubles over there. Don't know if it's in the iPhone 5 area. Doesn't really matter. That's the news I would think that is pushing Apple lower, off $11 here this morning. That's what's putting some pressure on the markets out there. Microsoft down 19 cents. Intel off 41. Google off 6 pennies right now. Cisco down 12. If we take a look at what is popping and what is dropping out there, you've got Rock, Tennessee Company, RKT, little rocket ship, up about 7% this morning, up $4 and change. International Paper, IP, up 4%, up $1.37. Packaging Corporation, PKG, next up 3%. You've got Joy Global up a little over 1% this morning, up 78 cents out there. To the downside, of course, you've got Apple leading the charge, $1 dollar-wise to the downside, percentage-wise to the downside, though, you've got Questcor Pharmaceuticals. We briefly touched on it here a few moments ago. It's trading out at $20.20. It's a real shame for folks that are in this equity here. This traded, and we're talking about on July 13th, the week of July 13th, got up to a high of $58.91. You realize there's some folks that are still sitting in this stock up at those levels. It's trading at $20 right now. This thing's going to run all the way down to $5. $5. If we go take a look at the last time that there was any volume on this thing on a weekly chart, you'd get down to November 16, 2007. $5.18 was the high. $1.33 is the low. Let's take a look at the monthly chart, see if this thing is trading inside any kind of a swing point out there. No, it is not, and the only swing point that it's headed to is going to be that high volume area from November of 2007, $6.12 on the monthly chart. It's at $20 right now. That is a shame if folks are just sitting in and holding that thing. Take a look at the daily chart out here. The daily chart, this thing drops like a brick, thick as a brick. In fact, Ian Anderson was in town last night doing the Thick as a Brick album out there. This thing dropping like a brick on September 19th, getting down to a low of $26 and change, $26.35, with 64 million shares. Now, I don't know if you're going to do 64 million shares today, but people are unloading this thing. You've already done 5 million shares in just the first 7 minutes of trading out there. That is on Questcor Pharmaceuticals. You got Peregrine Pharmaceuticals. They're getting, oh my goodness, holy cow, that's down 80% this morning. Says their lung cancer trial data was erroneous. Oh my goodness, let's go take a look at that stock chart. Let's go see if in fact there was any signals, if the bulls or bears, really the bears here, were giving us any signals out there. PPHM, oh my goodness, if you went to sleep on this thing on Friday, it was in the $5 range. And this thing here already now at a buck. You want to talk about taking it in the shorts out here. And no, I don't see where any of the bears were giving you any type of signal. Let's go take a look at the weekly chart, see what this thing was doing out here. We'll look at the weekly and the monthly. Let's take a look at the monthly. Let's start with the highest level first out here. Now, if we take a look at this equity here traded as high in June of 2006, folks, was up at the $7.96 range. This thing has pretty much had a beeline south. You had wide price spread, certainly. Well, you've had wide price spread this month when it got up to $5.50. When it was getting up to $5.50, it was coming into this shooting star on a monthly, this bearish engulfing candle. Never really made it all the way up to the top out there. Not a lot of signals here that I can see. Again, let's come back to the weekly, see what it was doing. It was taking out some swing points here. Man, this is just out-and-out fraud, it would look like to me, on Peregrine Pharmaceuticals, off 80% this morning, and off 80% with some volume behind that move. So far today, it has done 21 million shares. This thing moved up with a sign of strength on September 7th. That must have been the erroneous data that was out there. What a rotten shame if you happen to be inside that equity. You've got Citrix Systems. They're off about 4% this morning. Rand Gold pulling back. Let's go take a look at Rand Gold. GOLD is the ticker symbol out there. This has been a very strong equity out here. So let's go see what the pullback here looks like this morning. Trading out at 120.68, and the pullback doesn't look like much of a pullback here whatsoever. So really, this thing, the last sign of strength came into this on September 14th when it gapped up with 1.4 million shares. The low of that gap is 118.63. The low has not been tested. You got down with 748,000 shares. Two trading sessions later on the 18th, that was going against 1.4 million shares, moved higher, and moved higher with conviction on September 21st. The question is, where's a good buy to, where's a good place to enter this trade? Just have to watch this here for the next couple of days. This was also taken out. Let me put the weekly chart now that the week is over. So this thing here was taking out a weekly swing point That goes back to 11-11-11. You got to love it. So the week of November 11th, 3.6 million shares. The high was 120.73, and as it was coming into that, it did it with 3.4 million shares. Again, 3.4 going against 3.6, not too bad. But last week, taking it out with 5 million shares. So this thing has got some conviction. It's taken out a weekly swing point. And, boy, if you take a look at that possible A to B equals CD, that could be a large one out there, really large out there. That is on Rand Gold Resources. Let's go take a look at a couple things here that are popping. Let's take a look at what is leading percentage-wise. You got Body Central Corp, BODY. They're up 12.5% this morning. I don't see any news on it, but let's go take a look at the chart and see what this is doing. BODY again is the ticker symbol, and this looks like a horrible chart. Man, oh man, look at this thing. Let's put this on a weekly chart first here, and let's go ahead and pull this back. This looks a little bit like Questcor Pharmaceuticals, doesn't it? But let me just refresh the data, make sure that we've got everything that we want. This thing traded off of its highs, folks. This was on the week of May 4th. This thing was at a high of $30.93. Got down to $14.87. 50% haircut. That was not the end of it. The volume, not too bad that week. 5.3 million shares. Of course, this thing never really able to bounce. It traded sideways for about 4, 5, 6 weeks out there until the week of June 22nd, 2012. And then the kibosh put on it, moves down with 24 million shares out there. Don't touch this thing with any kind of poll out there. Wait for that. Don't even. Let's put this thing on a monthly basis. Let's see what this thing is doing monthly wise. And talk about absolute price destruction in in a couple months, going from $30 all the way down in essence to a low of $7 and a change out there. That is on Body. Let's go see what the heck they actually do out here. BODY is the ticker symbol. Just out of curious. Body Central Corp is the business name. Specialty retailer of young women's apparel and accessories in the South, Mid-Atlantic, and Midwest regions of the United States. Doesn't sound like their stores are packed out there. Certainly not the way that this thing has traded. Let's continue taking a look and see what things are popping out here. You've got Rock, Tennessee. RKT is the ticker symbol. Let's go see what that is. The leader in the clubhouse, up $3.90. Then we'll go take a look at Apple, see what kind of volume is behind its down move today here. If you take a look at Rock, Tennessee, moved up with some nice volume on Friday. You've got some follow through today. Looks like it's taking out swing points. Let's pull this back. So it's up against the swing point high on the daily chart of March 2nd, 2012. 1.7 million shares out there. Coming into it on Friday with 622 million shares. So you've got volume as it comes into that swing point. And today so far, 629,000 shares. So this thing looks like it's got a confirmed daily A to B equals CD. We'll put it on the weekly chart. But the daily coming off a low on June 4th out at $49.25, up to the swing point high on July 29th out at $63.95. Does a pullback for a few trading sessions. Looks like that low came in July 25th at 55.74. Let's see, as this crossed its B point, did you confirm it with volume? Let's take a look at that. We're going to mark the B point both on the price and on the volume standpoint. This thing first comes through its B point, doesn't really do it with volume on August the 14th. The next trading session, you close above it. You don't have the volume, but you do as you come back and you test it, certainly on August 20th. So it confirmed at least 1-to-1. This is going to do a 1-to-1.272 A to B equals CD, almost completing that. That would be at 74.57. But let's take a look at the weekly chart and see if it was coming into the weekly chart here with volume. So the week that we're looking at, really a couple areas. March 2nd, 2012 did 5.7 million shares. As you came into that last week, 7.9 million shares. It certainly does want to take out those highs. It wants to get up and test the high of June 3rd, 78.64, 7 million shares. You're trading inside that swing point right now. That is where Rock, Tennessee's Rock, Paper, Scissors wants to trade to. Let's go take a look at Apple. Now down $8 and change out here. Let's see what was behind that move volume-wise. As soon as I can find the chart, it should be probably right in front of me. I'm sure it's right in front of me. There we go, Apple was right to my right-hand side. So this thing here gapping down into what looks like a sign of, this is the area here that was a bearish engulfing candle. So, folks, old support, old resistance becomes support, old support becomes resistance. In this case here, you had resistance, which was on September the 10th out there. That high was 683.29. That body engulfed not just the prior trading session. Prior trading session was September the 7th, but it really engulfed several candles out here, really quite a few. Now, the high again was on September the 12th, was 683.29. There was 17 million shares out there. When this thing got over it got over that area, the resistance area, got over it with conviction, 21 million shares. So what does that mean? When old resistance is passed with conviction, what does it become? It becomes support. So think of the price point, $683.29. What did Apple do today? Traded down to a low of $683. $683 even, and that area, as you can see, has held as a support area. Now it's coming in there. You've got 5 million shares today. That 5 million going against 17 million. So there is some volume in here. We'll just see where Apple does, how Apple decides to close out there. I don't know what the problems are behind their issues over in Asia. Apple still wants to get up to 714. That's the 1.618 expansion. Of course, this thing is such a rocket ship that it defies pretty much every technical indicator that you've got out there. Now, it does give you candle patterns, as places to be aware of. And certainly if you knew that was a bearish engulfing candle and you knew that old resistance became support, that would be helpful when you took a look at what Apple was doing here this morning in the early part of the session. Let's go take a look at here's a stock that's trading up 80%. So we had one trading down 80% to the downside. We've got, this must be a buyout here, LML Payment Systems. Let's see, what is this? Digital River to buy LML Payment Systems. So let's go, and they're getting a heck of a nice premium on that. Let's go see how this equity here has traded. LMLP. I hope some of you out there have a little bit of that LML Payment Systems out here, trading at $3.40. And this thing coming all the way back to its swing point high of February 9th, 2012, out of that price point at $333. It's at $340 right now. Okay, oh man. We take this stock back. This thing traded here, folks, on the daily chart as high as $6.14, March the 7th out there. That is on LMLP, LML Payment Systems out there. Let's go see what else is happening here in the marketplace. Let me switch over, take a look at the DAX. DAX is down 47 points right now. Gold is trading down $12. Silver, let's go take a look at silver. It's off 59 cents here this morning. As I pull up the silver chart here, this is going to be the longer term silver chart. You can see QE3, the week of September the 13th. The low out there during that week is $32.51. If you get silver pulling back to that area, that may be the place where it would be a nice buy. $31.93 as well. That would be your 50-day moving average out here. Again, the low on the week of September 14th, $32.51. Pulling back. Now, that's the weekly chart. Let's go take a look at the daily chart on silver, see what she is doing. She had a nice golden cross. That's where the 50-day crosses the 200. That puts silver back in a long-term bullish mode. It's been a long-term bearish mode ever since you had the death cross. That's when the 50-day crosses through to the downside, doing that back in October 2011. Of course, when it did that, you had silver trading out in the $35 range, went ahead and made its lows, tested the lows back in December 2009 out of $26. Went ahead and tested that area again back in June of 2012 out at 26.10. 877-927-6648. Dow's down 47. S&Ps are off 6. It is a 3P index day today, folks. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. And yes, following this show, you got Tom and I doing the Money Masters show. Then we go up to Newton, Massachusetts to Basil Chapman from 11 to 12. Larry Pesavento is back with us from 12 to 1 today. Daryl Martin 1 to 2. David White 2 to 3. The Ken Shreve Show from 3 to 4. And then Tom O'Brien from 4 to 6. It is a wonderful programming out here. It is a beautiful thing. We're taking a look at light sweet crude right now. We've got light sweet crude trading down at 91.63. This one's lower price. This wants to get down into the $86 range. That would be nothing more than a normal retracement coming off of the lows out here. The lows in light sweet crude that we're looking at, that I'm referring to, are June 28th, when it made a low of $77.21, made an A to B equals C to, yep. I don't know if it actually completed that. I do not think it completed that A to B equals C to up. I think that was at around the 103 level, 104. It was 104. Never made it all the way up there. And right now you've got light sweet crude pulling back. What it's done so far, folks, it has done a 0.382 retracement of the low, which we were talking about, that low going back to June 29th. And then the high out here that came into being on September 14th out at 100.42. So the 91.59, it's actually 91.68. 91.59 is a 0.382 level. If it breaks through there, that's where you'll see $86.13. That would be setting up a Gartley buy pattern. Now, if we take a look at the retracement, though, thus far on the way up here, you'll see not much of a retracement. It would look like to me that if oil continues to trade lower, you'd be looking at about 81.84 as the area. Now, that's the 0.786. That is also a 1 to 1.272. A to B equals CD down. And what it would be doing, folks, it would be coming back into an area where you saw light sweet crude break out. You would be testing the swing point from June 28th as well. That would be a pretty nice trade if it were to set up like that. Of course, it's going to need some help from the King dollar. If we go take a look at the U.S. dollar index, that is trading out right now at the price point of 79.73. Let's go take a look at the chart. Where she blows. There we go. Okay. So if we take a look at King Dollar's got, really, quite frankly, a little bit weak here as it tries to make a dead cat bounce up to the $80.76 range. Now, folks, all I'm doing is I'm just simply coming to the July 24th high out at 84.25. The U.S. dollar index made a beeline down to the lows on September 14th out at 78.60. The 0.382 retracement of that area takes you to 80.76. It is getting up there slowly but surely. If these markets are going to have any meaningful correction, the king is going to have to take over. That means the king is going to be leading the queen out there. And if we take a look at the euro, we're talking about the euro. If we take a look at the retracement there, you can see that on the euro, if you come off of the same low now, you're just flipping this chart around. That low is out at 1.20411, all the way up to the high that was put in last week. It was put in at 131.673. You'll see the 0.382 retracement there would run right into that red diagonal line out there. That is the neckline of a head and shoulder pattern. I suspect that is what the euro wants to do, is do that little dead cat bounce, get back into the 127 level before it continues with its move higher out there. Folks, stay tuned. Tom and I will be up next. I hope you are having just simply a marvelous Monday out there. We've got the Dow trading down 41 points. S&P's off 5. Let's see here. Leading the charge on the way down still is the composite. Why? Because Apple off $7 right now. So thanks for joining me, folks. Remember this. You've got an amazing power within yourself, folks, and that power is so strong, it will produce miraculous outcomes. It will build billion-dollar businesses, create magnificent money masters. That's what you are, folks. Thanks for joining me. Look forward to seeing you soon. Bye-bye now.